Hello everyone, this is Hank Gibson with Texas Top Aviation and the Aviators Academy here at Oshkosh. I'm here with Joe Braunstein from Assured Partners, getting some information and education about aviation insurance. Thanks for being with us, Joe.
Absolutely.
Appreciate it.
Look forward to it.
So just tell us a little bit about the aviation insurance landscape now and what pilots can expect when they call you and say, hey, I need insurance for my airplane.
Yeah, and it's an interesting question because the marketplace does work in predictable cycles.
Mm-hmm.
And what I mean by that is, we came off 2006 till around 2016, where a very soft cycle took place. There was a lot of oversupply of capacity. And what I mean by that is there were a lot more insurers that were available and a lot more opportunities for customers to procure insurance. There were some geopolitical and some events in the world that sort of shifted towards the marketplace, creating this level of unsustainability from a pricing standpoint. And with that, underwriters had to reevaluate their portfolio. And the first step we saw back in 2018 were a few of the insurers pull out of the insurance marketplace, providing general aviation insurance.
Insurers being underwriters.
Underwriters,
Yeah.
correct,
Yep.
yes. And when the capacity starts to shrink, the underwriters underwriting the risk start to shrink, the balance of the marketplace really has to stress test their portfolio and make sure that they're getting to a level of profitability. And a number of underwriters told us that senior leadership was basically giving them a short leash to create profitability or basically pull them out of the marketplace as well. So that's where we saw the spike in insurance cost, the shrinking of terms and conditions available from about 2018 to we're kind of coming out of that hard cycle now.
Yeah.
But the landscape right now is kind of back to what we saw back in 2006, 2007 with, underwriters see the pricing go up, see the terms and conditions shrink, see some profitability come back into the marketplace. So we actually have seen a few underwriters come in and start to underwrite general aviation risks and aviation risks in whole again. But we're still dealing with supply chain issues. The cost of repair for aircraft is still continuing to increase. Interest rates, are still at a spot where it's difficult for insurers to make money. But we're still just dealing with supply and demand. With more insurers coming in, unless you've got some really unique offering, they're just going to compete on price.
Yeah.
So we're starting to see some not back to where we were in the mid 2000s, where underwriters could get pilots as approved and real low deductibles. But we're at a spot now where it's flat and starting to recede from a pricing standpoint again.
Okay. And more underwriters in the market would mean more competition.
More
so
competition.
That's better for pilots and owners trying to get quotes.
Correct.
A lot of pilots don't know how the insurance shopping process works. Can you explain that a little bit?
Yeah, I think that if we're going to look at the general aviation portfolio in aggregate, let's talk about it from the perspective of the owner pilot segment, and then the turbine world, where you got high end aircraft either flying Part 91 for companies and owners or charter. But from the owner pilot segment, Assured Partners with a broker and look after over 38,000 clients. So it's the same information you're used to seeing. Year, make, model, value, hours that you've flown. Age is becoming a big topic, which I'm sure we'll dive into in a little bit. And then what the team automatically does is go around and try to line up experience, exposure, aircraft with the markets where we've got a lot of success in the past.
Yeah.
So they're going out automatically to behind the scenes. They're going out to all the different underwriters that will underwrite the private and business owner segment, and presenting to the marketplace or to our clients the best option. At renewal, we're still doing the same thing behind the scenes, and if we do happen to find a better option, we'll present the renewal option and the other option for you to consider as well.
Okay.
In the turbine world, it's a little bit more complicated. It's a little bit more in-depth and detailed. The underwriters are going to dive into a lot more about aircraft and training and the specific mission profiles and how you're flying the aircraft, as opposed to really just, sort of processing an application and submitting quotes. So, again, behind the scenes, we try and line up strategy, at least on the more complicated and complex risk,
Right.
with our clients up front, so they know where we're going.
Yeah.
They have a say in who we're going to go to. Some clients elect to just renew with the incumbent. Some want marketing every year, and that's for our clients to decide. We really try and make sure that canvassing the market. But a lot of what we're doing is looking at the data. With so many programs, so many policies, we're trying to make sure that the last transaction is applicable. Our clients are getting the best from the last transaction for the next one to make sure that we're always on top of the market.
Okay. As the agent, do you guys have any sway, for lack of a better word, over the underwriters in helping your clients out?
Yeah. So I look after our carrier relationships, our client relationships, and we're always in front of the underwriters. We're always in front of the leadership and underwriters, making sure that the value of our portfolio is being recognized, and we're trying to separate our offering from those that are our competitors.
Right.
With the amount of premium that we place, we want to make sure that there's a different level of view and optic that we get within an underwriting company. But we will meet with our leadership, or the leadership of the underwriting companies, quarterly.
Okay.
To do health checks. Make sure we understand what's working, what isn't. If things are starting to change, we want to stay out in front of that. Or from our standpoint, if we found some issues or choke points with clients, or we're watching trends develop, we want to make sure that we've got those solutions developed, and we want to make sure that we're not getting to a renewal faced with a problem. We kind of understand what that problem is going to be, and then find solutions around it.
Okay, great. How are underwriters currently seeing older pilots, and what age cutoffs are you seeing that underwriters are just saying no?
Well, the no question is difficult.
Yeah.
I think the break point that we're starting to see more prevalent in the marketplace is age 70.
Okay.
And I think that underwriters are going to look for a little bit more detailed underwriting. So they're going to want to understand, the value of the aircraft is a big deal.
Okay.
So if the aircraft is, under $250,000, it's a little less rigorous.
Yeah.
But you'll probably see, a shrinking of the limit. You may see some requirements like dual. You may see, more required training. But I think that's the thing that we would want our clients to understand up front is the more training that you're doing, underwriting around the specific mission profiles, so, day VFR, and actual currency.
Yeah.
Underwriters will look at an older pilot, and, if they're flying 15, 20 hours, that's a difficult risk.
Right. Sure. Because they don't fly enough.
And it's just being out and consistently having that repetition. So we would urge our older pilots that are out there continue to fly.
Yeah.
If you find that you're in a situation where you've got a risky profile, or it's the weather is starting to deteriorate, take a second crew member.
Yeah.
But also project those. Tell your broker about those kinds of things you're doing, because that's going to create a better result for you in the marketplace.
Okay. And I'm assuming that if an older pilot, say in his 60s, is thinking about upgrading to a bigger, faster airplane, they should talk to their agent first and get a feel of whether or not they can actually get insurance on that airplane.
Yeah, and I don't think there's really a path to absolute no.
Okay.
It's just about, you're correct. What's the story?
Right.
Let's talk about it. And unfortunately, it might be a dual situation.
Yeah.
It may be enhanced training. It may be, certain risk profile just isn't, something the underwriters are going to look at.
Right.
But we can talk about those things and make you, give you the best opportunity for success in the marketplace.
Okay. So call you before the contract's signed.
Yes. And, look, if it's a transition, let's make sure it's a logical transition.
Sure.
It's not going from a 182 to a TBM 900.
Right.
Right. Make sure that, and if it is, what are the interim steps that you're taking? Is there another step that you're taking in between to get yourself to that high performance complex aircraft?
Okay. Now, I know there's a lot of variables with this, but how are underwriters treating fixed gear, single engine piston pilots who are wanting to move up to that single engine turboprop?
Again, I think it's about experience
Yeah.
and the transition.
Mm-hmm.
So there might be a dual requirement,
Yeah.
for 25 or 50 hours, depending on what your baseline experience is. Folks that have been out in the system in complex airspace, that have a lot of time out in the environment. There's probably a little bit less that they're going to have to go through, because of the proficiency component.
Right.
But I think that again, there's paths to insurability for everything. It's just about having that dialogue and that conversation.
Sure. Last question here for you, and you've done well under my grilling. So talk about simulator training and how underwriters kind of view that, and what types of airplanes that they usually say only simulator training as opposed to in-airplane training.
I think that the in-aircraft, it's going to be really, it's going to be a combination of existing experience and the value of the aircraft.
Okay.
So as the value of the aircraft increases, underwriters are going to scrutinize the risk and scrutinize the pilot, scrutinize training a lot more, because they've got a lot more capital, in the event that something happens, a lot more capital exposed.
Right.
Simulator training is pretty well required in the multi-engine turbine world.
Sure.
And as you kind of back your way down, we took a poll of our clientele, and as an example, SR-22s, all the way up to some of the brand new ones with pretty significant values.
Yeah.
They were some initial training with the CSIP, and then just really just looking for that biannual training.
Yeah.
So it really just is a function of the experience, the exposure, the value of the aircraft, and really what you're looking to do with the aircraft as well.
Cool. Well, Joe, thank you for your time. This has been very educational for me, and hopefully educational for our viewers too. Have a great rest of your Oshkosh.
Absolutely. Appreciate it. Thank you all.
Thanks.